Hey everyone, this is Will from PowerTraders.com. Today guys, I'll be doing some analysis on some US indices, and let's jump ahead. As you guys can see here, we're currently looking at the S&P 500 E-mini futures. So let's see here, we had a bit of a sell-off this last week, right? We're down only 2.5% though, very little. But of course, the question arises, do we buy the dip? Especially as a trader, do you want to buy this dip? That's probably, a burning question is a lot of traders asking themselves right now, and for good reason. One, we are at support, critical support of this channel trend, right? Look, we're back down this blue line support level, which has held one here, second time here, third time here, and we're testing it right now. Of course, you have two touches here also, kind of. But we're holding support, so this, in my opinion, does look attractive, right? Of course, you want to really type stop loss because we could come back down and test this green support level here, corresponding with this move here back in March of 2021. So we could either see a reversal right here from the blue line support level or the green line. We also have a strong resistance level here at 43,060. That could also be an interesting entry, long trade there, good entry. However, the risk is if we do break this support level here, right? If we break the green line and we break this level here at 43,065, guys, there's not a lot of support. There's not any support levels here. So once we break this, we could go down really fast. Like I said, there's any real support level in this range here that could be holding. Although yes, maybe you can kind of say maybe that's a support level, but still this is a pretty big gap. There's not a lot of support level here. We could fall down really fast, and people think, well, that's a pretty big crash. Well, crash, right? But not really, guys. Look, if we start from the all-time high here at September 6th, if we came all the way down here, that's only a 9% correction. Further down here, a little less than 12%. To be honest, that's not. Yes, that's a correction, but that's nothing new at all. Look at this. Look at 2020. Look at this. We had a correction that was roughly around 10%. We had another correction here. This one's a pretty brutal one, and guess what? It also happened in September. Exact same, roughly around the same time right now last year. Look at this. This one 10%. This one here is roughly a little under 9%. So this, this is scenario you guys have to keep in mind if you want to buy the dip. If that's your strategy, I'm gonna buy the dip. Great, the support level we're holding, right? So there's definitely a strong argument to buy the dip and trade like that. However, you do have to, right, always consider the other scenario and also plan for the worst. The best traders in the world are, they're great at that, and they always protect their capital. And on the other hand, there's also a pretty solid argument also for arguing for the downside or a correction, right? We haven't seen a decent correction. The last time we saw was back here in October and September of 2020. So it's been roughly a year since we've seen any significant correction. And recently, the market's been very volatile, right? Even 2020, look at 2019. We also had, look at this move here. 20% correction, right? You guys may remember this with the whole debacle with the interest rates and Powell. That was pretty brutal, right? And guess what? That also started in September as well. So statistically, stocks don't do well in September, October. Statistically and as well as historically, price. There have been many occasions where we've had corrections in September and October. However, on the other hand, we had a correction in 2020 during October and September. We had a correction in 2018 during September to October. We didn't really have one in 2019, although this does, we did had a bit of a correction here, but even then, this is not that brutal. I think it was like around. Okay, I take that back. A little less than 9%. So we did have a correction here, but just because we had a correction pretty much every year in the past 5 years. During September and October doesn't mean that it will happen again, right, guys? Just because it happened the past 2 years doesn't mean you should bet that it will happen again this year. On the other hand, right, it could be self-fulfilling prophecy. I've been watching CNBC. Everyone's, you know, some people are quite fearful. They're like, oh, correction's coming. Don't buy anything right now. Leave cash on the side. Buy when the dip comes. Buy when the correction comes. And that strategy may also work too. But a good trader, you want to plan for both. For in the case that we do have a bullish reversal, and for the case that if we do go to the downside. For example, if we break this level here, right? If we break 43,055, are you going to be longing there, or is this presenting a great short opportunity? You know, are you going to short there, maybe profit somewhere around there or there? You know, these are questions you're going to have to ask. And when it happens really fast. So you want to have a plan, a strategy, and when the opportunity comes, you cannot be fearful. You've done your homework, you keep to the levels, and you just go for it. All right, enough on the S&P here. Let's look at the NASDAQ. NASDAQ doesn't look that interesting in my opinion. Yes, we didn't even come back up to the top end of the channel to test this resistance level here. The charts I think are not looking too great. A little messy here, but we could come back down, test the support level here. Maybe we see a resume off. On the other hand, just like the S&P, if we do break this, guys, there's not a lot of room. There's really no real support level. So if we do break this level, we could really come down pretty fast also. Again, this is of course assuming there's going to be a correction in the market in the coming months, but it's definitely a scenario to keep an eye on. To consider. On the other hand, we could hold this level and maybe finally come test this resistance level here, which we haven't tested in a really long time. Last time we tested this level was back here in February and in September of 2020. So it's been a while since we test this level here, and that would be exciting if we do. You know, imagine we had a breakout there. Market's gonna go crazy. There'd be a lot of FOMO also. You know. Okay, let's see what else. Let's look at the Russell 2000. Russell 2000. Give me a second. Let me look at the other one. CFD contract. Oh, not that one. Russell 2000. Here, US 2000. That's the one I was looking for. Okay, as you guys can see here, you guys watched my videos a few weeks ago, right? We came all the way down here to test a major support level of this trend, right? And if you enter a trade there, great for you, because look at that. If you bought here, you know, you came back up here pretty much near the resistance level. So if you take profit here, that's a great trade. So congrats for those of you guys who took that trade. But right now, the Russell doesn't look that interesting at all. Nothing's really happening here, guys. We're kind of in the middle of this range again. You know, what that means is you know, we could come back down, test major support level again, or come back up, see if we could try to break some of these resistance levels, right? But because we're in the middle, you know, nothing's really interesting, at least for a swing trader, right? We can't really exploit the price testing support. You can't exploit, you know, or having a short position because price are testing resistance level. So right now the Russell is just pretty much not that interesting. Now, on the other hand, though, PSCT, which is a small cap of the technology ETF. However, it looks much more interesting. Look, if you look here, it looks like we had a let me log it out. Yeah, it looks like we're coming back down to test the support level. We're holding the 20 moving average right now, but we could come back down, test the support, because we did have a breakout. This breakout seems pretty obvious to me, right? It looks pretty clear. We could come back down, maybe resume off. Let's see what happens. I think this small cap tech stocks or I think could be interesting. And you could find, if you could find a stock, a small cap technology stock that looks attractive, this you know, this could be very interesting trade for you guys. Let's see what else here. Let's look at the Dow Jones. Dow Jones futures YM. There we go. All right, so the Dow Jones doing much better today than most U.S. Indices here. Of course, we came back down here, holding support, right? This has been support before, support here, So we're holding support. We're coming back up. Let's see what happens. We still have, of course, this critical support level to break, and of course we have another one here. But right now we're trading at a range. This could be an interesting trade, but on the other hand, we're up quite a bit already. So maybe a pullback and then resume off could be an interesting trade if that does play out. On the other hand, if just like the S&P and just like the NASDAQ, if we do break this support, however, again, there's not a support, right? If we break this, we could go down pretty fast, right? There's not a lot of support level in this range. If we do break it, you can kind of go, there's one there, like that. Maybe there, even there. So if we do break 34,530, if we do break that, just like the S&P, we could really come down pretty fast. Definitely something to keep an eye out for. All right, let's look at the economic calendar before we end this video. Let's see what's happening this week. So we of course have core CPI on Tuesday tomorrow. So exciting. Let's see how the market reacts to that, right? Got some oil data coming out. Core retail sales, that's also interesting. And of course, initial jobless claim. By far, I think the most important one. Let's see what happens. Right, because if the initial jobless claim comes really strong, a lot of people going back to work, then the market may price in the possibility of interest rate much earlier. Although I think the market is expecting a hike probably early next year. I don't think the market is currently pricing a move, increase in interest rates, potentially maybe end of this year. But the market is a future-looking mechanic, right? So if, say, they're gonna hike the rates in 3 months, say in December, right, or November, say December or November, right, then we're just a few months away from that. So I would expect the market to at least start pricing in those stuff, right? Increase interest rates, So I think that could be a catalyst for a correction if all of a sudden all the data are coming out really strong and the Fed's like, oh, okay, maybe we should increase maybe rather than increasing the interest rate early next year, maybe we'll increase the interest rates at the end of this year. And if that happens, maybe we'll see the correction a lot of people have been talking about. And I do hope it actually happens. I don't like the stock market that just keeps going up and up and up, because one, it leaves a lot of people behind. I know a lot of smart traders, as well as investors. The times where they really start buying are actually during corrections. That's what the smart money is. At least that's what smart money does. On the other hand, when there's no correction for a while, the question, you get the FOMO, right? Every dip you refuse to buy, it just keeps going up and keeps recovering, and that could be frustrating sometimes because you're just missing out. Because every time it dips, it just goes back up, and you would have made money. But anyways, it really depends whether your time frame, your trading strategy, whether you're a trader, investors, whether you're a trader or you're an investor, those are two completely, in my opinion, totally different businesses. They trading, investing, they're nothing alike. Obviously there's some common ground, but I think they're just two totally different businesses. Anyways, guys, hope you guys enjoyed this video. Please give a thumbs up and subscribe for more content.